All right, so the last week has been pretty good for crypto. We're seeing Bitcoin up 10%, Ethereum up 30%, and some of our favorite altcoins up over 50%. But the big question right now is this just a fake out? Are we going to see prices drop, or are we finally starting to see the next wave, the next rally up to new record highs? So I want to talk about it. We got some good news. We got some bad news. Let's just jump right in. So first thing with the good news is that we have seen the overall crypto market break back above a couple of very important levels. First is that we have seen overall cryptocurrency market cap break back above the $1 trillion market cap, which is a key psychological level for institutional and retail investors. So this is something that is good to see. Over the last 7 days, we have seen that Bitcoin is up 10%, Ethereum is up 30%, and one of our favorite altcoins, Polygon, is up a massive 60%. So like I've always told you, with Ethereum and Polygon, if Ethereum is doing well, Polygon percentage is always going to do even better. If Ethereum is doing bad, Polygon is probably going to do even worse. It's like a leveraged Ethereum play. So keep an eye on that. But both of these, we've seen massive rallies in, and these are projects I'm very bullish on long term. When we're looking at other overall market data, there's other things that is pretty good. We have seen that right now, that crypto fear and greed index has been in extreme fear for the longest period ever. And while this may seem bad on the surface, this actually is signaling that we are due for a breakout very soon. Right now, the crypto fear and greed index is at 20, and we have seen over 70 days in a row of extreme fear. This has never happened before, and this to me is signaling, okay, we've been in extreme fear territory long enough. Now it is time to see a little bit of a rally. Is it going to be the rally that brings us to new record highs? Probably not, but at least it's signaling that we are due for a breakout in the short term. I want to quickly interrupt today's video to bring you a word from our channel partner, Fairdesk. Fairdesk is one of our longest term sponsors on the channel, and they are a cryptocurrency exchange that offers up to 125x leverage. This is the platform where I have currently been doing a lot of my leverage trading as of recently, because they have a very simple and easy to use platform that really provides investors with access to the global crypto markets. Some of the features that I personally enjoy and use the most on Fairdesk are three things. First is that they have a simple mobile app with great charting features if you like technical analysis. The second is that they also offer leverage trading on dozens of the top trading cryptocurrencies. And the third is that they have easy access to short or long any of your favorite cryptos. If you sign up for Fairdesk today using the link in the description, you can get up to a $600 bonus when you deposit $100 or more. So if you're interested in trading crypto specifically with leverage, I definitely think you should check out Fairdesk. Remember, leverage trading is high risk, high reward, but I think this platform is definitely worth checking out. Anyways, let's get back to the program. Other thing happening with the crypto market, which is a little bit bad, is that we have seen that Bitcoin right now is still below its 200-week moving average. And historically, this 200-week moving average has been a very important level. We have rarely seen Bitcoin ever drop below this level, and right now we are still below it. So the thing to keep an eye out on right now is that while Bitcoin has recovered, we have seen it up about 10% and up pretty significantly from the lows just a couple weeks ago. The one thing I'd say is that we have not yet crossed back above this 200-week moving average. We need to see a weekly close above it, which is above $22,650. If we don't see a weekly close above it this week, I'm expecting another drop down back to potentially those lows we saw just a couple weeks ago. So we need to see Bitcoin break back above this 200-week moving average. Then things will start to be a lot more bullish in my mind, more of the middle to long term. Last thing I want to go over with Bitcoin is going to be with liquidations and a report from Grayscale. So liquidations, we have seen there's been close to $400 million in liquidations over the last 24 hours. A vast majority of these have been from short sellers and positions that were betting against Bitcoin. We could see that 240 million came from short sellers, 108 million came from long positions. So this is many of the reasons why we are seeing Bitcoin and Ethereum rally. We have seen Ethereum really pop as of recently in Polygon, and that is because we have seen short sellers of Ethereum have been just liquidated. They represent the largest amount of liquidations out of any crypto over the last 24 hours. You could see $10.16 million of ETH has been liquidated versus $7.28 million of Bitcoin. Bitcoin. So as we're seeing prices rise, that's going to liquidate a lot of these short positions, causing prices to just rally and pop a little bit faster. So that is something that is also pretty good with crypto. Doesn't have long-term impacts, but it could help us break through some of these key psychological levels for Bitcoin. Now let's go into this Grayscale report for Bitcoin. There's a new Grayscale report that came out that talks about how Bitcoin could potentially still have 250 days left in this crypto winter. They talk about how in previous cycles we have always seen that it has been about 1,275 days that Bitcoin and the crypto market has been in a crypto winter. Every single market cycle, they say it's about that time before we see prices start to rally again, before we start to see new record highs reached. The way they define crypto winter and its a cycle is when the realized price of Bitcoin moves below the current market price. Basically meaning, are more people profitable or are most people in the red? And right now, most people are in the red. So the key thing here is that while they say we may have 250 days left in this cycle, in this crypto winter, I would say I don't think so. They're basing this based off of historical patterns, historical trends. And as we can all see, historical trends have really been broken for the crypto market. We were expecting Bitcoin to rise well above $100,000 per coin. That didn't happen. We were expecting an 85 to 90% drop for Bitcoin. That didn't happen. We didn't drop 85%. We dropped close to that, but not in the 80% range. So a lot of these historical trends have been broken. And I would say we can't just base Bitcoin off of historical patterns because it's a completely different market. There's institutions involved. There's a lot more money involved. We've seen all these things go on with crypto lenders and bankruptcies. It's a very different market than it was just 4 years ago. So keep an eye out on this. But right now, I'm pretty excited about crypto. The one thing I would say is we need to see this 200-week moving average. We need to see Bitcoin break back above it. That is one of the most important things to see right now for Bitcoin and overall market to determine where we will be more in about 6 to 12 months from now. Anyways, that's what's going on in the market. Hope you enjoyed today's video, and I'll see you guys in the next episode. See ya.